We are all familiar with the human emotions of fear and greed. Human psychology and our decision-making process are varied, intricate affairs that take into account numerous variables. Unintentional fear, uncertainty, and doubt, FUD, can occur when consumers give false explanations for particular unfavorable information, such as market corrections, and misinterpret it. A classic instance is when some users believe that crypto is dead when the market for cryptocurrencies corrects itself after a general economic downturn. FUD has a tendency to spread like wildfire, and since the emergence of online communities, this has a negative impact on certain initiatives. FUD can also be purposefully created and coordinated by parties with an interest in profiting from it, such as rival projects or powerful investors, sometimes referred to as whales, who occasionally utilize it to manipulate markets. It is important to note that in many jurisdictions, this can have serious legal repercussions. In today's video, we'll talk about how fear and greed influence how people make decisions as a group and how the Fear and Greed Index attempts to gauge how this influence affects the crypto markets. At Finance Doc, we will be sharing more explanation videos related to cryptocurrencies, trading, forex, and many more. So, watch this video till the end and hit the subscribe button and click on the bell icon to get notifications for our future videos. So, let's begin the video. What is a Fear and Greed Index? To start, let us understand how fear and greed affect the markets. Fear. Market participants typically fear losing their cash when fear is the dominant emotion. They might sell their assets if they are worried about the stability of the market and the worth of their token holdings. Additionally, in an effort to profit from the fear sentiment, some traders may start short-selling these assets as a result of this. Fear is frequently associated with falling asset values or markets, whether these decreases are caused by macroeconomic causes, such as inflation, recession, economic crisis, or geopolitical issues, or asset-specific factors, like declining values of certain assets like an oil and gas price decline. Negative news about a cryptocurrency project that drives down the value of its token might also trigger it. Greed. In contrast, when greed rules the market, investors are more likely to amass more assets and attempt to avoid missing out on prospective rewards. When markets and assets are heading upward, this occurs. Fear of missing out, FOMO, often known as another type of fear, frequently coexists with greed. Participants in the market are concerned about missing out on possible advantages in this situation. The Fear and Greed Index. The original Fear and Greed Index was developed by the CNN Money team as a key market indicator to monitor how these two human emotions affect the stock market. The index's purpose was to identify if greed or fear was driving certain markets or assets above or below their purported values. Two distinct emotions are shown at opposite ends of the Fear and Greed Index's continuum, which spans from acute fear to excessive greed. The CNN Fear and Greed Index used a number of variables to assess the level of fear and greed in the stock market. Although cryptocurrency markets are different in many ways from other markets, some of these factors do not apply to them. This has prompted the creation of a Fear and Greed Index just for cryptocurrencies. How is the traditional Fear and Greed Index calculated? The original index developed by CNN Money relied on factors relevant to stock markets, including stock price momentum, comparing the index against a 125-day moving average. Stock price strength, number of stocks with prices hitting a one-year all-time high versus the number of stocks with prices hitting a one-year all-time low. Trading volumes, those of rising stocks versus trading volumes of those declining. Put and call options, more put options equals fear, more call options equals greed. Junk bond demand, higher demand for bonds with an elevated default risk usually signals greed. Market volatility, based on a 50-day moving average. Safe haven demand, difference in yields of stocks versus those of treasuries, such as sovereign bonds. As one can see, the majority of those elements don't directly affect cryptocurrency markets. If you are still watching this video, don't forget to hit the like button and share your thoughts in the comment section below. If you haven't subscribed to the channel yet, please subscribe, as that motivates us to bring more videos like this for you. How is a crypto fear and greed index calculated? Several cryptocurrency indexes have since been created, including one by Alternative.me that makes use of the weighted data from the following sources. Volatility, 25%, current market volatility and average values compared to the last 30 and 90 days. The higher the volatility, the higher the fear. Market momentum/volume, 25%, comparing buy and sell volumes to the last 30 and 90 days. Higher buy volumes compared to the immediate past signify higher greed. Social media, 15%, social media interest in Bitcoin, the volume of social media interactions and the general sentiment. Surveys, 15%, polling the opinions of users and investors. Dominance, 10%, rise of Bitcoin dominance usually signals fear. Trends, 10%, Google search trends. How do you read a crypto fear and greed index? The Fear and Greed Index is a scale that covers the entire gamut. Peak fear value is at the lowest end of the spectrum, peak greed value is at the highest end, and there is a range of possible values in between. In order to provide both the most recent numbers and historical values, the index is routinely updated based on calculations and data sources. The index displays a numerical value together with the meaning that goes along with it. It might display 27 fear or 85 extreme greed, for instance. Key takeaways. A Fear and Greed Index gauges market participants' attitudes. It is derived using a number of metrics specific to the cryptocurrency market, such as volatility, volume and velocity of the market, and sentiment on social media. Learn to read market sentiment when there is a lot of fear or a lot of greed. Making selections can be aided by keeping an eye on the index. What are your thoughts on the Fear and Greed Index? Share your thoughts in the comment section below to let us know. See you in the next video. Until then, take care and stay fit in health and wealth.
Thank you for watching this video. If you like this video, don't forget to hit the like button and subscribe to the channel so that you don't miss out on our upcoming videos.